Moving next, we're going to focus now on trading of qualifying commodities. When we are referring to trading of qualifying commodities, this qualifying activity covers the physical trading activities of qualifying commodities and associated derivative trading used to hedge against risks involved in such activities. And what do we mean by qualifying activities for the purpose of the free zone framework? Here we are talking about metals, minerals, energy, and agriculture commodities that are traded on a recognized commodities exchange market, and they are traded in a raw form. When we are referring to raw form, we relate to commodities that are in their natural and unprocessed state, and no value has been added to the commodity. So they are basically products that are close to the form they were when they were registered or extracted from nature. And it's important to note here that in cases where we have a certain degree of processing, which may be sometimes required in order to meet trading standards or specifications to be traded in a recognized commodities exchange market. And this processing typically aims to ensure uniformity and qualifying control of quality control of the commodity. So in these cases, we still consider that the commodities are in a raw form. And when doing this analysis, we can also take into consideration the harmonized system of nomenclature, the HSN code, which can serve as an indicator in verifying whether the commodity still maintains its raw form. But it's important here to notice that in some cases, a mere alteration of the HSN code, just some level of processing, does not conclusively determine whether the commodity has lost its raw form. So the HSN is a code is an indicator, but it's not conclusive to this analysis because the new HSN code may as well be the case of a code that is traded in an exchange market in a form and pure form. So it's not to be conclusive. It's a tool that is useful in this case by case analysis, but change in the HSN code does not necessarily mean that a commodity has lost its form, raw form. And also, when we are referring to a recognized commodities exchange market, we are referring to any commodities exchange market established in the UAE that is licensed and regulated by the relevant competent authority, as well as any commodities exchange market established and recognized outside of the UAE of equal standing. So there is not a prescribed list, but this could be, for example, the Dubai Gold and Commodities Exchange, the London Metal Exchange, or the Chicago Board of Trade, or any other recognized commodities exchange market of equal stand. And also, it's important to bear in mind that the trading of qualifying commodities does not necessarily need to be performed on this exchange market per se, because of exchange transactions can be also treated as qualifying activities if the underlying qualifying commodity could have been traded on a recognized commodities exchange market as well. And when we are talking about qualifying activity of trading of qualifying commodity, this includes some of the following activities. So I'll give you a few examples. This could be the case of physical trading, buying and selling of qualifying commodities, the trading of associated derivatives to hedge risks. So, for example, in the case of using financial instruments like futures or options to protect against potential financial risks or losses that could incur in the commodity trading process. Also, the related ancillary activities. As we mentioned before, ancillary activities are the ones that are naturally and integrally complement to the main activity. So in the case of qualifying commodities, this could be, for example, warehousing, because this is a intrinsically related activity to the trading of qualifying commodities. So for instance, the storage or housing of qualifying commodities before they are delivered to the buyer, as well as the delivery, because the delivery is an activity naturally related to the trading of qualifying commodities. So when you have the transportation of the qualifying commodities to the buyer, for example. And now I want to guide you through a quick example to demonstrate an analysis of the raw form of a qualifying commodity. So in this example, we have our LLC, a free zone person that trades in cotton bales. And their cotton is harvested and ginned to remove seeds, and then the cotton is compressed into bales. So as you can see, there is some level of processing of the cotton. However, this is a minimum process, and in this case, the cotton still retains the raw form, and the cotton bales are traded on a recognized commodities exchange market. During the year, our LLC sells these cotton bales to OLLC, and RLC is considered engaged in the qualifying activity of trading of qualifying commodities. On the other hand, we have another entity, PLLC, another free zone person that trades in cotton bale. And this year, PLLC sells cotton fabric to CLLC. In this case, PLLC, they made use of the cotton bales, but they made some process to woven into fabric for making clothes or other textiles. So as you can see, in this case, the process significantly changed the form of the cotton, and the cotton is transformed into raw cotton fabric. In this case, this processing makes the cotton to change and to lose the raw form, and once it becomes a cotton fabric, it is no longer as, considered as a commodity that is able to be traded in a recognized commodities exchange market. So in this case, PLLC is not considered as engaged in the qualifying activity of trading of qualifying commodities.